This is stock sectors. Ari's going to take a look at 12 sector ETFs, doing unusual analysis using our MCI, that is the market condition indicator. Ari, show them this great indicator.
Stock sectors, sector ETFs for September 21st, 2023. This is RV Ramachandran. So in this video, what we're going to do is look at the 12 sectors of the market that we follow using just one of our studies, and that is the askSlim Market Condition Indicator, which is available for level 4 members and up. And this is a fantastic study because it uses multiple time frames to give you a single sum of the evidence reading. It'll range anywhere from minus 100, which is very bearish, to plus 100, which is very bullish. There's also something called a swing zone, which is in the range of minus 25 to plus 25. If you have an MCI reading inside of that zone, that is a neutral condition. Okay, so let's go ahead and jump in. We will look at 12 sectors of the market using the MCI. And this is our grid using thinkorswim, and you'll see the askSlim MCI here right there on each of those charts. And what you'll see with this grid, which I can share with level 4 members and up at askSlim, is a very quick reading in terms of what sectors of the market are bearish and which ones are not. And if we very quickly run through this, we see that the XHB is minus 98. That is very bearish. You'll see that the XLI is minus 100. That's also bearish. You'll see that the XLB is minus 100. That's bearish. You'll see that the XLV is minus 76. Also bearish. XBI minus 100. XLP minus 87. XLU less bearish, minus 37. One thing to watch here, if you see that the MCI is actually moving up to the base of that swing zone, we now have to watch for a failure in price versus that 65 area, and you can see it is failing versus that level. So if you see the MCI come to the base of the swing zone, you would watch for a failure in price. Conversely, if you see the MCI coming off of the top as it is doing right now, and it holds the swing zone, you would then watch for price to actually turn back to the upside after that, if the MCI can hold the top of the swing zone. So that's something that you do want to watch quite closely. But right now we're seeing a failure in the XLU at the base of the swing zone, and we are turning down sharply. If you shift over now to the XLF, this is not bearish. We have a 48 reading, which is actually a positive reading still in the XLF. Let's go ahead and move over to the XRT. That's minus 100. That's very bearish. Shift over to the XLC. We are now at plus 28, very close to that swing zone and likely to move into it. So heading into a neutral condition. Shift over to the XLK, minus 80. That is very bearish. And also now shift over to the XLE. This is plus 67, and that's actually a positive reading. So just using this one indicator, you can see that the only sectors that are still positive are the XLF and the XLE. None of the other sectors of the market are positive right now, and that is why we are seeing so much weakness in the market, is that we don't have a lot of groups to really lead us on the upside. The MCI uses multiple time frames to give you that sum of the evidence condition and properly weights the longer term trend. So as you see the MCI turn down, that is giving you important information about weakening that's happening in that longer term trend. So it is really a very key aspect of what we do, and one of the core tools that I always keep on my charts all day long. If you have any questions, feel free to send me an email, and you can also post it here in YouTube, and happy to answer that for you. Thanks again, and I hope you guys have a great day.